Here we go. We're going to do this every day. And how many times on Sunday? I don't know, at least once. So here we are on a Sunday, checking in before Monday. We start trading away, having a good time. Wanted to share a few things with you. I've got where is it? Here it is. I've got a screener up of companies with a $1 billion market cap and above that are reporting earnings this week. And there's like 680 of them. So I will include this. I'll download this, put it into a spreadsheet for you. If you want to just look through that, I've already had some earnings, trading through earnings scares. So I'm not certain that I'm interested in trading directly through earnings again. However, there are a number of companies on here that I want to keep an eye on, because maybe we can take advantage of some of that volatility with companies that we would want to own anyways, right? So we'll look through that, or I should say you'll be able to look through that. I'll include it. Coca-Cola, obviously, we've got some shares in that company, watching that closely. We've rolled those for additional premium. We're in at just over $59 bills, and it's currently trading over 63. So that's good news. There's a handful of other companies that keep showing up on different screeners that I've got to dig into a little bit more. Archer Daniels Midland is one of them. Biogen, etc. and etc. Dow. I know Dow has kind of been a dog, but it has a nice premium. And is it underpriced? Let's just take a quick look. Where? Let's take a look here. Oh yeah, one of them that I found. I got some notes here. Some ticker symbols are already on my list for deep dives. One of them is Lazy Boy, ticker symbol L to the Z to the B. Lazy Boy over on Alpha Spread. They're showing them as 31% undervalued. Which screener did they show up on? I've been running like so many different screeners, having a good time, because different screeners have different looks to them, different feels to them, different options. I do like finviz.com. This is a free screener. You got to see all the little ads pop up and whatnot, but that's okay. So I'm looking through the different screeners, trying to cross-reference and find some companies that I need to be looking at, putting my eye on, doing some research, little deep dives, Lazy Boy being one of them. Even those conservatives over there at Zacks.com show Lazy Boy as a 1. That is a strong buy. So we'll be looking at Lazy Boy along with a handful of others. So I will include the upcoming earnings screener into a spreadsheet. That'll be included in this video. I was also looking at Coca-Cola FEMSA. Coca-Cola FEMSA keeps showing up on so many different screeners, and you see what the ratings are. We got 3 buys, one of which is a strong buy by the quantitative or 2 D2s and CP3Os. Is it C3PO? Did you just say that wrong? Probably. Yeah. So, and what's interesting, a couple of things that stand out about Coca-Cola FEMSA. One is this. So if we looked at ranked in industry, they are 1 out of 15. Number 1 ahead of Pepsi and Coca-Cola. Dr. Pepper Keurig. It's number 1 out of 15. So they do pay a dividend as well. It's 3.28%. Here's the interesting part about the dividend is that it pays either an annual or a semi-annual. So if we click through the dividends, they're coming up on their ex-dividend date. So that will be May 1st. That's just around the corner. So in my mind, what I was thinking is if it goes red anytime this week, we might pick up 100 shares or so. because if we look at the dividend history, they pay a pretty good, nice chunk. And it looks like right now they're just showing that they're going to pay an annual dividend. But they, in 2021, they just said the same thing. Here's our annual dividend. Oh, yeah, here's another one. So I'll be looking at Coca-Cola FEMSA, that dividend scorecard. It shows them at a 193 yield, but that's not accurate. That is not accurate. So we will be looking at that, determining whether or not to pick up some shares, because I can't trade it like I would want to trade it. What was the ticker? KOF. It's a monthly. I can't trade it how I'd like to trade it, because if it was a weekly, I would have sold a put expiring this Friday, which would have been ahead of their ex-dividend date. But this option, they trade the monthly, so it's the third Friday expiration of every month. That's 26 days out, and we'll miss out on that premium, or miss out on that dividend. And the premium isn't very big either. So at $80, it's 80 cents, which that's fine. I mean, that's just over 1% per month, which is serviceable on a dividend stock. But what I was thinking was, if we bought it at 83.06, so we paid $8,306 for 100 shares, and then we turned around and immediately sold a call for 40 cents at 85. Now we're talking, aren't we? Now we're talking turkey. So if we look at the 40 cents, right? Let's just call it $40 bills. So $40 bills plus the $160 that we would collect from the dividend, that would put us at $200 divided by the $8,306 we would invest. Okay. So that's 2.4%, but that's in 26 days. So if we divide it by 26 and then multiply it by 365, we end up with a 33.8% annualized return. So something to think about. We'll keep an eye on that. We have a number of options expiring this Friday. This AbbVie, as it stands now, I'll be rolling that. And we'll keep an eye on all these puts. Hopefully AMD will continue to profit along with Caterpillar. Devon's going to be a nail biter, I would imagine. Hopefully we'll have a little spike in oil this week. Maybe that'll give me some breathing room, because I have a big enough position in Devon right now, with monkeying around with Valero Energy, Katera, EOG Resources, all of the above. I don't want to get too out of pocket, too much overweighted in the energies and the oils and those cyclical style stocks. Got the Ford. We got a couple of Googles. Now this one will be interesting, because Google will report their earnings this week, right? Which day? On the Google we have earnings of April 25th. So which day is that? That's Tuesday. So Tuesday Google reports, so that makes those puts very interesting. In fact, we may trade out of that tomorrow, just for fun and prosperity. Or is it posterity? It's both. So we'll be looking at that. We got the Coca-Cola call to look at. They report earnings as well. Altria reports earnings this week. Valero reports earnings this week. We have some SPY trades that hopefully will be closing at 50% and above in the profit. So all kinds of fun stuff going on. Speaking of the SPY, I was looking at the SPY, and this is a 1-day chart, but it's a 5-minute intervals using the line instead of the candles. And I have the RSI indicator and the MACD on this as well. And to add those, you just click on the little, first you go to chart, then you click on the little indicators, and you can put whatever you'd like up there. I like the Bollinger Bands, but I changed the moving average. So here are the moving averages. I changed them to a 48-day and a 13-day. I was reading on some different SPY trading strategies. This is mostly designed for scalping, so quick profits based on the charts and the movements. So this is a 5-minute chart, 1 day, and on the board we have, so the blue line, up and down blue line, if you see it right here, that's the stock price. The green line is the 13-day moving average. The purple line is the 48-day moving average. And what I was reading about was when that green line crosses over and goes above the purple line is your entry. So you would take an entry here, which would be, it's not showing me what the price is, around 411.19. And then you're also looking for the MACD to cross over and some interesting or some volatility on one side or the other on the RSI. Now, SPY doesn't typically have, especially lately, any big swings in the RSI. But when it gets high, a high number, see it right there, it's at 67. If you follow that line all the way to the right, you see it 67. And I have it set for 30 and 70 as the zone. So anytime it gets close to that 70, that would be considered overbought. And then anywhere down near that 30, here it is at a 40, 38, then it would be considered oversold. And you see the stock kind of does, it flows exactly with those indicators. And so if you looked at when that green crosses that purple, and you see what the stock price does, it goes up. So is that something to keep an eye on? I probably wouldn't be trading any actual money on it to begin with, but you know me, ready, fire, aim. So it's possible. Could you get a little scalp action? Now it's a bit of a risk, obviously. So if I was buying at $411, so you just bought, well, say you went with 100 shares and it cost me 41,000. No, that's crazy. You're gonna put up $41,000 on something you don't even know what you're talking about yet? No, probably not, but I'll keep watching it. I'll do like some paper trades, I guess, and just keep an eye on is this something that can be looked at as indicators. Now, obviously, you'd want to do this on days where you didn't have Fed reports or big earnings coming out from big companies like Google and as Tesla did. Those types of companies have direct impact on the market. If the market doesn't like, or one way or the other, it could be that the market loves the earnings. It could be that the market hates their earnings and it goes up more emotional than it should be, one way or the other. So looking at that, what else did we want to talk about? Oh, yes, I know. Also, I have all my SPY trades up to date in the spreadsheet. So these were the 0 day or 1 day. So I was doing all those 0 days, if you watched those videos. And then I added a couple of 1 days towards the end here. And if we look overall, so we had some that were abort, man overboard. We took some big gas on those, like $465 there, $330 there, $610 there. And then we had some buy to close, but I didn't want to I was calling the buy to close an abort, but that's not technically what I have in mind. A buy to close is we're buying to close and profiting. So if we run the numbers if we just look at just line up all the numbers and see what we've done, we are up $1,016, and it's about one and 3/4 month, 1.75 months. And typically I don't have more than 2,000 on the board. So that's not bad. I mean, that's $1,000 more dollars than I had going into the experiments. What I have determined though is I'm not sure the 1 day trades are my style. I don't want to watch the market all day and then worry about when my 1 day trade is under pressure, because there's very few places to hide when that trade does go against you because of the theta that is decaying by the second. Now that works in your favor, obviously, when the trade goes your way. But when it doesn't, it's trouble. So I got the other trades that I've been doing on the SPY here as well. These are the 14 days that I just started. My very first one was April 13th. So I've only been trading them for 8 days. But look what we're doing here. We are currently plus $1,993 in 8 days. Now, some of these that are opened, I'm going to be closing. If we look back here, like if the market was open right now, I would definitely be considering closing this trade, but I wanted to run that through the weekend because Monday morning when the market does open, this number is going to change. That's the frozen number from when it closed on Friday. So I will be looking to close all of them as they go, which makes them way more manageable for me because there's some time. Time can do so much, but I'm also running up the collateral a bit. We got a couple of them where we got 10 grand on the table. And Donnie pointed out a very good one, which I don't know even what I was thinking when I made this trade. I collected $210 on 10,000 in collateral. Hello. And that's on paper just a 2.1% return. So I want to try to think through these trades a little bit more in detail, a little bit more clearly before putting them on each day. So the plan has been putting them on at the end of the day for 14 days out, a trend that I have noticed. And again, this could change abruptly at any time. But if you've been watching the SPY, you've been watching S&P 500, you've been watching the SPX, it's been trading in a channel, essentially sideways, bouncing up a little, bouncing down a little, bouncing up a little, up and down in a channel for some time now, which should be very good for collecting money in what is turned out to be a low volatility market on the SP and the Y. So we'll keep an eye on those 14-day trades so far and the so good on those. So I'm excited about it all. I'm very excited about it. I delivered Lady Tanzalot to the airport this morning with her sister cuz Kristen, and Kristen's mom, Stacy's aunt Kathy. So the three of them are heading down to Mexico for a week, soaking up some sun. So that's good. Going from 38-degree weather to 88-degree weather. My buddy Brian picked me up. So when I got back from the airport, my buddy Brian swung by the house, picked me up, drove me over to his pole barn where I fired up the 1991 Mustang GT convertible. Fired right up. He stored that for me for the winter. Very nice of you. Not overly exciting though when you're picking up your convertible and it's 40 degrees out and gloomy skies. But at some point that'll change. So I call the car Foxy. If you do know why I call the car Foxy, then talking major drum roll, please. You are very cool. And leave that in the comments below if you do know why my 1991 Mustang GT is nicknamed Foxy. And what else? Oh, I got a bunch of Cubs games to watch, so I'm busy. I got things to do. I got a lot to do, and I'm going to share a lot of that with you this week. Thank you so much for tuning in. Make sure you are indeed a subscriber to the channel, The Wealth Snowball. Me and you becoming best friends in stocks, options, and dividends. Click like on the button, or click the button. What's it called? The like button. Click it. Just clack it. May as well click on that notification bell also. Leave me a lovable comment. Share this with as many friends that are cool as possible, and I'll see you in the next video.